to share anything?
Yeah, it's a good idea.
Thank you. Shall we start, or you want us to wait for?
Let's wait 2 minutes. I see the attendees list is increasing, so let's wait. Let's wait for to stabilize. I'll turn off my. It's 2-1. You can start if you want.
Okay. Good morning, good afternoon, good evening. Welcome to day 2 of Finance for Development Labs discussion. My name is Xiangjin Wei. I'm with Columbia University. Our first session will feature 2 very good thinkers, and as well as advisors to development world. We're going to start with a keynote presentation by Professor Justin Lin, who is the Dean of the Institute of New Structural Economics at Peking University, founding Dean and now Advisory Dean of the National School of Development at the Peking University, and formerly the Chief Economist and Senior Vice President of the World Bank. And then he will be joined by Bert Hofman, currently the director of the East Asia Institute at the National University of Singapore, formerly country director for China and Mongolia for the World Bank Group. So Justin, let me start with you, please.
Okay, thank you very much. And I like to use this opportunity to make 3 messages or 3 points of ideas. The first one is why public debt is desirable for development. And the second point I like to make is the determinants of debt sustainability. Under what kind of situation that will be sustainable? Under what kind of situation that will not be sustainable? And the third point I like to discuss is the desirability of providing more debts to a highly indebted country. Those are 3 topics I'd like to cover. And certainly, I'd like to provide my analysis based on the new structural economics which I advocate in the past decades. Why public debt is desirable for development? Because we know economic development is a process of structural transformation to transform from an agrarian economy to industrialized economy, and climb up the industrial ladders all the time through technological innovation and reallocate resources from low value added industry to higher value added industries. And this kind of technological innovation and industrial upgrading make the improvement of productivity feasible. But only technology and industrial sectors only provide the production possibility frontier. And if we want to move to the frontier of those promised by technology and industries, we need to have infrastructure, including electricity, road, port facility, and telecommunications. And those kind of infrastructure is lumpy and there's some kind of minimal scale to make it work. And those kind of infrastructure also have large externality. And the private sectors will not be able to really provide the needed infrastructure for the structural transformation. And so we need to have the state to involve. And then because it's lumpy, you need to have a minor scale. Very often, the government won't have sufficient resources to provide needed infrastructure for the structural transformation from domestic resources. So if there's a possibility to get more financial support outside the country, either from the development aids or from the international borrowing to support this infrastructure development would be conducive to the dynamic economic growth through the rapid structural transformation in the country. And I think that is the reason why we need to have public debt in order to make this kind of structural transformation to move and to kickstart and to move continuously. That's the first point. But certainly, if the government borrow debt to support the infrastructure investment and so on, or any kind of debt, there's an issue whether the government will be able to pay back those debts. Now, if they cannot, then will be some kind of crisis for the country, or even trigger a crisis in the world. And from the new structural economics point of view, debts will be sustainable if the debt is used to facilitate the industries with the latent competitive advantages in a country and with the improvement of infrastructure to turn the industry to become actual competitive advantages. Because we know competitive advantages is determined by their factor endowments. And if the industry and technology are consistent with the nature of their factor endowments, we call that consistent with the competitive advantages. But actually, that is only the latent competitive advantages. Because if your industry and technology are consistent with your factor endowments, it only makes your production cost to be low. But if you want to be competitive in the domestic market and international markets, it's a competition of total cost. Total cost includes two components. One is production cost, basically determined by the factor cost. The other one is transaction cost. Transaction cost is largely determined by the condition, the availability of infrastructure. And so in a country, in a structural transformation, try to turn their latent competitive advantages into the actual competitive advantages. They need to reduce the transaction costs by improving the infrastructure. And actually, if you have this kind of adequate infrastructure, the latent competitive advantages can be transformed into the actual competitive advantages very quickly. And by that, you can compete in domestic market and international market. You can create jobs, you can promote growth, you can increase export, you can enlarge your foreign exchange earnings. And with that, you will be able to pay back the debt. So then you are not going to have the sustainability issue. But in a developing country, certainly infrastructure is poor everywhere. So under this kind of situation, not only you need to target sector which you have latent competitive advantages, you cannot provide infrastructure for the whole nation. Under that kind of situation, it would be desirable to be pragmatic, starting with some kind of enclave approach. By improving infrastructure in a spatial economic zone, expropriation zone, or industrial parks, within the parks or zones to make your infrastructure sufficient to help your latent competitive advantages to be, actual competitive advantages. If you adopt this kind of very pragmatic approach, targeting latent competitive advantages instead of high-tech, sexy industry, and starting with some kind of enclave approach, and this kind of pragmatic approach can help the country to have a virtuous cycle, because by that you can grow very fast, and the government will generate more resources, and you can further, support the diversification and industrial upgrading, and you can improve the infrastructure to other parts of the country. If you follow this kind of pragmatic advice from the new structural economics, I think that will be sustainable. But that will not be sustainable if the government is too ambitious. Try to develop industry which look very sexy, very modern, but which are not consistent with their competitive advantages. Under that kind of situation, even you make the investment, you provide the infrastructure, but your production cost will be too high. And then the industry will be competitive at all. Just like in China before 1978, we invested a lot in heavy industry. And we have a complete set of heavy industries there. But the cost of production was too high and they were not competitive at all. And that's one thing. If you target sectors which are too advanced and they are not viable, then you will not be able to pay back the debt. Or you are targeting sectors which are consistent with your latent competitive advantages. And but you encounter some kind of global shocks. And under global shocks, global markets shrink. And even your sectors are consistent with your competitive advantages, they may not be able to export, they will be hit. And they will not be able to earn enough foreign exchanges to pay back the debt. That's the second external shock. And the third situation is that sometimes the government borrows debts not to facilitate the structural transformation directly. They borrow debts for non-production purpose. For example, education, health, unemployment relief, and or environment protection and so on. All those certainly are desirable with a good purpose, but they will not contribute to the export growth and so on. They will not enhance their ability to have more foreign exchanges. Then under the kind of situation, even the intention is good, but they may not be able to pay back. Then that sustainability will be an issue. So that's my second point. You need to be pragmatic, targeting the right sectors and starting with the right areas. And we know that many countries in the past, especially in the developing country, they did not follow the advice of new structural economics because at that time there was no new structural economics. And so they made many, wrong thing, even they have good intention. For example, they invest a lot in the heavy industry, which they did not have in, comparative advantages, or they are too ambitious to try to, build the industrial park in every county in their country, and they have too many industrial parks, but none of them have adequate infrastructure. Or they borrow a lot of money for humanitarian purpose, education, health, environment, and so on. And as a result, they cannot generate enough foreign exchanges to pay back the debt, and they may become highly indebted, and many of them are low-income, highly indebted countries. Under this kind of situation, whether we should continue to support them certainly depends. Because for them, unless they get some kind of forgiveness, forgiven, otherwise they need to pay back the debt. And even you have a restructuring, you also need to pay back the debt. And if they want to pay back the debt, they should enhance their capacity for export. And if they follow those kind of basic principles I just lay out from the new structural economics, but they need to have infrastructure to make that happen. So under this kind of situation, because unless the international community, come up with some kind of plan to forgive their debt, otherwise we need to continue to support them with more debt. But this time, I advise them to read the new structural economics, to follow this kind of very practical, principle, to support the sector which they have latent competitive advantages, and turn that into actual competitive advantages with the improvement of infrastructure, and so they can be competitive in the domestic market. And with that, they can generate more foreign exchanges. They will not only be able to pay back the new debt, they will have the ability to pay back the gradually to the old debt. So, and I think this principle should also be applied to development assisted development aids. If they, apply this kind of pragmatic principle, then the international support, any kind of support, will be helpful to a developing country for a dynamic structural transformation. So let me stop here.
Thank you very much, Justin. Let me invite Bert for your comments, please.
Well, thank you. Thank you very much for having me, and thanks, Justin, for your very clear and concise and precise explanation on how to use debt. Now, I realize in talking that the World Bank did the wrong thing in China, because the very first loan to China was actually on education, namely on the university education improvement. So I guess we started off on the wrong track. Afterwards, of course, there was a lot more infrastructure finance. And so from an ex-ante perspective, your remarks are great, and that's really what every country should do. Unfortunately, there is not, I think, a rule book on what is your comparative advantage. And that is really a search process that you find over time, and countries make mistakes, even the best winning countries that would like to follow the new structural economics. And so you are running into troubles in countries from time to time. And then the big question comes, well, first the ex-ante is, how do you deal with that? And I think that a certain conservatism on foreign borrowing, given the uncertainties on potential economic gains from that borrowing, is warranted. And where that conservatism lies remains to be seen. But the debt sustainability framework of IMF and World Bank was born out of misery, frankly. I mean, it was born out of an over-indebtedness of a lot of countries, and subsequently thinking about where would a level of sustainability lie. So I think there is a framework that would, if you want, accommodate for disappointments. The second, I mean, I agree with you that to some extent, a lot of foreign assistance, including from a World Bank, has been diverted to non-productive means. So you can define productive the way you want, but to some extent, there has been a bias more towards social and if you want, knowledge building rather than infrastructure building. One good reason for that is, of course, is that the international community, as it is, comes together and provides the rules and the framework for that infrastructure building. And having been a director for a while in the World Bank, that is indeed constraining. You can't do everything that you want to do, and that would be useful for the country because of the constraints that internationally agreed framework brings. So that's a second restriction on it. On the third, and that is really interesting, that also brings me closer to sort of what China is doing now. It's sort of this, if you want, a certain flexibility in a repayment because of this uncertainty. So you could say you could sail closer to the wind, as the Dutch would say, lend more, or as a country borrow more, if you know that there is flexibility on the edges in case things don't really work out the way you expected. And that's, of course, that's where the big choice comes. Well, do we provide debt relief or debt forgiveness up front, or do we do things differently? Do we provide more liquidity to help countries through a difficult phase, because it can be a shock that will only last for a couple of years? or do we have other means of dealing with it? And of course, the big example was the HIPC example, but that was also a very dramatic example. And frankly, it excluded countries from capital flows, especially non-official flows, for quite a long time. And I remember it's a long time ago, but after the Asia financial crisis, Indonesia for a while fully met the HIPC criteria, i.e. in that terms of over-indebtedness. And there were political voices that said, well, let's go for HIPC. But the Indonesian authorities in the end decided against that because they knew that their reputation would be so damaged and that things would recover after a while, and therefore they decided not to go for the HIPC route. But I think from an international community point of view, I think this is really interesting. You need a much more flexible approach if you want to financing than I think currently is. As a matter of fact, of course, you would also need much more equity financing rather than loan financing, because some of these ventures that we call infrastructure ventures that might have a rate of return, but the rate of return is quite uncertain and might be very long term. It might be well over the term that normal lending provides, and especially lending from newly emerging lenders, including China, that is relatively short term. China's domestic lending from the China Development Bank has always been relatively short term, but then very flexible at the tail end, i.e. if you're not ready to pay it back, that's okay, we can refinance and then bring if you want the terms of the financing more in line with the returns of the project finance. That kind of discussion, and now right now we are in the middle of another debt, serious debt problem for many countries. I don't think we would want to call it a crisis, or I don't want to call it a crisis, but a serious debt problems in a whole range of countries. And that choice is once again, should we already forgive upfront? Should we provide liquidity? Should we reschedule debt so that there is more debt relief? And I'd be interested to hear your views on how, given your framework of new structural economics, how would that financing structure for such a world in which we have rational actors deciding on that framework, how would that look like?
Great. Justin, would you like to respond to some of Bert's question? Meanwhile, let me also say, other participants, you're welcome to post questions in the Q&A session, and I might combine some of them and ask the questions to our panelists on your behalf. Justin, please.
I'd like to make 2 points in response to Bert's comments, very valid. The first one is the last question, how to deal with the old debt overhanging. For that, I think either they need to be forgiven or they need to have relief. And there are many ways for debt relief in restructuring, haircutting, and so on. That depends on negotiation, depends on country cases. But that need to be separate from the debt for enhancing their capacity for growth in order to be able to have a sustainable development, to reach SDGs, at the same time to pay back the old debt. And what I discussed in my first 2 points will be essential for helping them to pay back, to have a dynamic economic growth, to reach the development target, at the same time enhance their ability to back the old debt. So let's respond to your last question. And for the first question, competitive advantages certainly is a concept understandable on the paper. But in practice, how can you identify the sector which you have competitive advantages? Well, I have 2 points to respond. The first one, certainly, we need to gain more understanding from those kind of concept to reality by more research, by more practice. If we agree with that, it's very important. Basic principle. Once we agree, we can do more research and to enhance our understanding our measurement. And for me, that's the reason why I set up the new Structural Economic Institute at the Peking University. And we now try to, develop a new metrics, new index, for example, congruency index and so on. And in order to provide more guidance about how to, identify the sector which you have latent comparative advantages. More research will be desirable. At the same time, if you go to the field, if you ask the managers or the entrepreneur, I think they have a very good sense. What areas they can do well. Because basically, I can use another phrase about the new structural economics or the competitive advantages. Look at what you have, based on what you have, what you can do well. And the government and the global community will be help the private sectors to scale up what they can do well. If you follow this principle, I think the entrepreneur, they know what they have in the country. Based on what they have, what they can do well. And the issue is that the scale is too small, and we want them to scale up. And you provide the infrastructure or some kind of basic environment, tax incentive, and so on, help them to scale. And then, then they can, quickly to turn a stagnant economy into a dynamically growing economy.
While we are waiting for questions from other panelists, let me ask some questions to Justin, maybe Bert as well, if I may. You don't have to answer all or any of them, but feel free to share your thought on some. So I think Justin made the convincing case that there's a need for infrastructure for development, and therefore there's a need for infrastructure financing. So that's very clear. What's I think less clear is I guess a number of things. One is, why should the infrastructure financing necessarily takes the form of a public financing? Should we try to find a combination of a private and public solution to that? Should we create conditions to enable more and more private sector financing? That's number one. Number two, even for the portion that needs to be public financed, it's not as clear why the infrastructure financing needs to go above government revenue for every country. So I'm looking at Bert is in Singapore. So Singapore is a country that have successfully transformed itself from a low-income third world country to a high-income country. Yet Singapore has fantastic infrastructure, and they didn't take the form of public debt financed infrastructure financing. And number three, even for the portion of the public financing that needs to go beyond revenue, there are different forms of financing. Some would use more, have a greater equity component. Some will use debt, and equity component will have much better risk sharing properties. So much of the debt crisis or problem that we're facing partly is driven by the form of the financing. So much financing relies on the non-risk sharing portion of this. I'm not saying it's automatically you can get the equity financing. Clearly, there are reasons why we see more debt financing than equity financing in some countries. But the question is, should we simultaneously also try harder to create conditions to attract more form of financing with risk sharing properties to avoid getting into this cycle of debt financing, debt problem, debt crisis, debt forgiveness, and the debt financing again. And lastly, just to follow up on Bert's question that Justin answered, but another version of the question about the current debt problem is, some of the debt has China as among the most important bilateral creditor, and the negotiation is getting to some impasse there. So I wonder whether Justin can share thought about some productive solution out of this. So for example, is there a enlarged Paris Club configuration? It doesn't have to be called Paris Club. It can be called Singapore Club or Jakarta Club that involves both traditional bilateral creditors as well as China it is multilateral institutions that will do something differently from what they are doing now. They lead to more productive solutions. So Justin, feel free to discard any of the questions and share your thought on any of those.
Okay, very good. I'll start. Maybe Bert can, say something else. Okay. The first one, why public debt or government involvement is essential for infrastructure development. That is an issue discussed in the 1980s and 1990s. I remember, there's a World Development Report, maybe issued in 1993, to argue that private sectors will be able to take care of the infrastructure, and the government does not have to involve. And actually, as a result of those kind of understanding, World Bank dissolved the infrastructure development department. Because infrastructure department used to be the largest, most powerful department within the World Bank. Because of those kind of new ideas, the private sector can take care of the infrastructure. That department was resolved. But let's see the consequence. Yes, there's some type of infrastructure. Private sectors is very keen, but only one type, that is telecommunication. Why the private sector is so keen, was so enthusiastic about the telecommunication? On the one hand, it has a natural monopoly. On the other hand, it's very easy to collect the fee. Combine that, private sector is super, commitment, wanted to develop those kind. But other than that, there's no private investment. Even private-public partnership, they're not keen. So I think that the public investment involvement for the infrastructure is essential, because first, it has a large externality, and then secondly, it's large scale, and lumpy. And its return very much depends on, your growth performance in the country. And the private sector has no control of the dynamism of the growth in the country and so on. So they refrain from involvement in those kind of, infrastructure. And that's the reason why we need to have the government support for the infrastructure. That's one thing. And secondly, should the government only use its revenue to support the infrastructure, and especially use the case of Singapore? But Singapore is a port. And so, it's just like a special economic zone in the port in China. And for that, certainly, they have a very good access to the infrastructure to begin with, especially for their export business and so on. That's one thing. Certainly, they are also smart. They started with the sector which they have latent comparative advantages. That's the labor-intensive industry. And use their port, export their labor-intensive product. They grow dynamically. They generate more revenue, and then they use their revenue to improve their infrastructure. You are right. But how many countries are port in the world with good access to the international market like Singapore? Many countries are large territory, some are hinterland, they are hinterland, or some are even landlocked and so on. Under the kind of situation, you cannot use Singapore as a reference. You need to know, you need to have an infrastructure and to kickstart the industrialization process. And you also need to build a role to link the market domestically and internationally. So that's my second point. But in a way, you are right. As I said, you need to start with your latent competitive advantages. And you start with some kind of very pragmatic on-grade approach. By that, the requirement for infrastructure will be much smaller. And you do not have to borrow so much. But because infrastructure has some kind of minimal scale, if you want to build electricity, you need to reach a certain scale, If you want to do the telecommunication, you need to reach a certain scale. If you want to build a road, you need to link that to the port, and so on. And those kind of minimal scales in low-income country very much beyond the capacity of the government. And so either international donors or international development assistance will be required. Or on top of that, some borrowing in the international market will be desirable. If they use those funds for the right purpose in the right way, as I advocated.
Thank you.
All right.
Bert?
Let me just briefly take on the Singapore point, because that's a really interesting one and a proud moment for the World Bank, because the World Bank did 14 loans to Singapore. The very first one was for the port, and the very second one was for Changi. So, and the third one was for electricity infrastructure, for water infrastructure, for many things. So what Singapore did was actually not get in the private sector first and then develop. No, they did actually public development of infrastructure and then privatized it, and in a very specific way. But they privatized most of the infrastructure, so it's now run as a public-private partnership. But it didn't start as a public-private partnership. And I have to say, and not just this experience, but also other experience of other countries, the reverse BTO is my most favorite form of public-private partnership, i.e., you take it on as a public sector and then privatize it as a brownfield investment where a lot of the uncertainties are gone. The uncertainties in construction of infrastructure are so big that even countries such as Britain and Germany, they can't manage it. And the public-private partnerships in Britain, which was the champion of public-private partnerships under Thatcher, have been really fairly disappointing and sometimes disastrous in some other countries. I don't want to talk about the new airport in Berlin, but so it's just very difficult to do infrastructure, lots of risk. The public sector doesn't always do it right, and of course they need to do have a lot of private contractors, but to start it out as a private investment is often very hard, with the exception that Justin mentioned. Just finally, on the financing side, I think banks such as the World Bank and others, they can do a lot more in this flexibility of financing. They already have to some extent. They have for natural disasters. They have these flexible instruments that give immediate liquidity for countries that are in need. You could equally do that for shocks in GDP. And there's been a discussion, there's an old discussion on indexing your repayment with GDP growth or your interest rate payment with GDP growth. I think there is room for that, to scope for that, because of a lot of the uncertainties that are involved in development. And it would simply give countries an extra option, maybe for a modest price, to postpone some of the payments in a year in which there are other matters to attend to. I have once proposed that in the World Bank. The World Bank is nervous about their AAA status, but frankly, I think the AAA status would last if there is a revenue model to finance that. Because there's one question in the box, and that is on the global public goods. And there, again, I think we need a very different financing model. Right now, we have the World Bank and the ADB and others as a major financier of green growth, if you want, but that's also providing a public good. There is no public subsidy, no global subsidy for that public good. It costs you as much in a World Bank loan to borrow for something that only has local benefits or something that has major global benefits. That can't be right. And that whole financing needs to change. Having a subsidized model or even a grant model for some countries for green growth would be a great solution and a great contribution to tackle that huge issue of climate change. Thanks.
Very good. We have probably 1 minute left. So there are many questions in the Q&A session, but some question has to do with incorporating the climate change into the future development financings, a point that Bert just touched on. I want to give Justin a chance to comment on this, whether you see climate change management can be productively incorporated in financing for development going forward?
Certainly, because we need to have development in a developing country in order to achieve other SDG goals. And for the development, the goal 9, industrialization will be essential, as I just discussed. But for that, we also need to have infrastructure. But we can build the green infrastructure, green industrialization in this process. So you can have development and also you achieve goal 13 of climate changes. But at the same time, we know that climate change is a global public goods. And for the climate change, we also understand the principle of common and a differentiated responsibility. The developing country need to have the development. They need to contribute to the green growth in order to cope with the climate change. But the cost for them will be higher. So under this, I think the developed part of the world first need to make the green technology available. So they need to invest in the R&D to provide the green technology and so on. But at the same time, they also need to honor their commitment to provide funding for the developing country to adopt this kind of green technology to have the green infrastructure and a green industrialization. And I think the green, the finance will be one way the developed part of the world made up, contribute some fund in order to soften the cost for adopting green technology, green infrastructure in the developed part of the world.
Great. Let me thank everyone for participating in the first session, especially Justin for sharing your thought and Bert for sharing your insights. So thank you, everyone. Let's conclude our session 1. I'll turn to Martin for our next session, please. Thank you. Bye.
Thanks a lot, Shengjin, Justin, and Bert. It was fascinating. It seems half an hour can pass in just a very quick, like for 40 minutes. And I want to start on the last point that Justin made on the question of how development should evolve with the climate constraints and growth model. And in maybe for those who did not attend the first day on Monday, just a word on the program. So with the Finance for Development Lab, we're an independent think tank. We are based in Paris. And we launched this program focusing on Chinese development finance, and we support both kind of policy exchanges that we had one on Monday with the Director General of the International Department of the PBOC, and the panel after that, and today with Justin and Bert. And we also support research, and so this session will be on 2 pieces of research, one by Christoph Nedopil from the Green Finance and Development Center at Fudan University, and with a discussion by Muyang Chen from the Peking University. And this session will be around how the challenges of climate and biodiversity will inform projects. So Monday was more on macro with debt and SDRs. Today is really on projects, climate biodiversity. And then we'll have after this discussion, this presentation by Christoph and discussion by Muyang, we'll have a presentation by Tianshu Sun from CAITEC and a discussion by Coraline Goron from Duke-Kunshan University, and then a presentation by kind of inform the conclusion by Minwen Zhang from the IEFI think tank. Let me turn the floor to Christoph for his presentation. It will last about 10-15 minutes. Then with the discussion. After that, you're invited to send questions to both Christoph and Muyang. And after half an hour, we'll go to the next session with Tianshu. The floor is yours.
Thank you so much. I hope you can hear me loud and clear. I got your message, 10 to 15 minutes. But first of all, I want to kind of first congratulate you for setting up this fantastic workshop, and also, of course, the FDL. I know it's been a lot of work, and I also want to congratulate you on the first day. I saw a lot of press coverage around this event, so really bravo. And it's such an honor to be here. It's of course very difficult to speak after Bert and Justin, but I try to do my best and pick it up from where they left it off, and without choosing sides at all. But I will talk about infrastructure finance, and particularly green infrastructure finance. Now, I do think I cannot yet share my screen. If that's if you can allow me to share my screen, that would be very helpful. All right, here we go. So I think you should be able to see my screen now. So I will talk about very much kind of in Justin's kind of discussion, but I think also in the broader discussion, accelerating green infrastructure project finance in emerging countries, and particularly addressing the ESG challenges for tripartite cooperation. And that means tripartite cooperation between China and international partners. So this is a quick content, so do a very brief introduction for those who are interested in getting to know what we do. And then we really kind of dive deeper and deeper. What is the status? What are the ambitions? And what is the reality and the challenges that we're seeing? And what are some of the key takeaways? So here are some kind of some recent publications. So the Green Finance and Development Center is a research center at the Fanhai International School of Finance, which is at Fudan University. So some of you might know it, some of you might, the panel might know it better than others. So what we do at the Green Finance and Development Center is looking at particularly Chinese role in the world, but also more broadly. So China's overseas debt, the BRI investment, China's green finance domestically, and we work with the G20. We look at the potential for early coal retirement, and we work a lot with the BRI Green Development Coalition, have established a traffic light system for the Belt and Road Initiative projects, or have also worked with the UN to establish the SDG finance taxonomy, both of which I was the lead author for. Now, kind of one of the big questions that we, of course, try to address is kind of what can we do with infrastructure? We know that infrastructure, we need more, and be it in the transport sector, in the energy sector, in the ICT sector. So where are we? This is kind of from our last BRI investment report. What we see here is kind of the development of Chinese engagement in the BRI through construction on the top and investment on the bottom. And we see that, of course, the main bulk of construction was between really 2013 and 2019, and then it kind of tapered off a little bit. And for investments, we also see some of the struggles after the 2020 COVID times. So we see some tapering off of Chinese engagement over the last years, again, due to different risk profiles in countries of the BRI, but of course, also overall travel restrictions. What we also see is that the main sectors are actually very much the core infrastructure sectors. So energy, which is the orange, and transport, which is the gray. That's where we see the most engagement, particularly through construction projects. And it is important to understand that most of the projects in the BRI are not equity investment projects, but are often financed through loans. And this is, of course, one of the big topics that we discussed on Monday. What does it actually mean, and how do we deal with some of the loans that have come up, which we often talk about the real public loans. There's, I think, even more potentially public guaranteed projects. Nevertheless, the BRI has over the last years kind of had a total volume of about 932 billion, most of it in construction, 561 in construction, and 371 in non-financial investments. Now that's pretty big. Now, if you look at just Asia, this is the in energy, just the infrastructure investment gaps for Asia. and we find that until 2040, we have about a $4.6 trillion investment gap. So that is a massive investment gap that we see. So even kind of seeing over the last 10 years, $900 billion of engagement, or close to $1 billion, if we have a $4.6 trillion investment gap. Now that is, of course, something that needs to be plugged. And a big ambition is, of course, to support the green transition. Here, kind of no good presentation from China comes without important quotes. And so there's a strong top-down level signaling that green should be the color of the BRI through green finance, green infrastructure development, and so on, with very strong support also for the Belt and Road Initiative Green Development Coalition. And that statement has really kind of permeated throughout the years and has also influenced policymaking. Here, kind of a summary of all the relevant policy documents that influence the greening of the Belt and Road Initiative from the different ministries, which you see on the left side, State Council, NDRC, across the years, which we see on the top side, 2012 to 2021. And what's really impressive is that since 2020, all of them have green dots. And what that means is that since 2020, the Chinese government has really put forward the idea to apply international standards for project development. Very different from previously, where they said you can use host country principles, which led to a lot of problems because a lot of the host countries don't have very strong environmental standards or the implementation of environmental standards. So since 2020, the Chinese government has been more and more specific to apply international standards in project finance for both the developers and the financial institutions. And that is really, really a really important change how business should be conducted. There are also a number of other guidances, like the traffic light system, that really received, I think, kind of very good reception. We just had a meeting on Monday again with all the many developers in the financial institutions to really kind of evaluate what type of project is green, yellow, or red, which should be encouraged or which should be stopped. I will not kind of discuss this too much to save the time, but the principal idea is that all projects can be evaluated in a two-stage process. And that means kind of what is the project characteristics. To give you an example, hydro plants are red project because of high biodiversity impacts from the get-go. Now, kind of the question is, how do we implement them? And do we integrate all of the ESG considerations into the project? And then it can become a red-green project. There's also an implementation guide for this for the financial institutions and for the developers. Now, what is the reality, though, in green project finance? And this is the research that we have been doing. So we have been conducting over 20 interviews, did desk research, in-depth case studies on kind of what does project finance look like and why is it so difficult, particularly for tripartite cooperation. If you think about it, there's this Chinese block of investments, there's this massive gap. China has a lot of capacity, technical capacity. There's not enough financial firepower. We need to combine it. How can we accelerate tripartite cooperation? So Chinese developers, international financiers, and much more than we see before. So that's what we try to find out. We kind of talked with the Chinese financial institution, the private corporations, the SOEs, and international partners to really dig deep. What does it mean? And it can kind of will not give you the spiel about what project finance is. Most importantly, project finance, good project finance, is about the allocation of risks. And the allocation of risks can take different forms. You try to get the right financial institutions, the right developers. So the overall project finance structure kind of really minimizes the risk because the projects are often in less developed countries with higher risk, with a very long time frame that makes it very hard to foresee it. So who's best placed? Be it commercial risk, macroeconomic, regulatory, and of course, environmental and social and governance risks. And here I want to give you two examples of Chinese projects that actually kind of try to apply these international standards. The first one is the CAITEC hydropower, which was China's first equator principle project. For those who don't know what equator principles are, it's a project finance standards developed by 4 private financial institutions that leans onto the IFC performance standards to really integrate the environmental and social management systems into the project design, the project management, from kind of start of the project until the end of the project. And so usually none of the Chinese overseas financial institutions is a signatory of the Equator Principle. A lot of the international banks, most of the important ones, are signatories to the Equator Principles. So the project in Pakistan is a 720 megawatt hydropower project. It's a flagship project under the China-Pakistan Economic Corridor. The value is about $1.74 billion, so it's a pretty big project, and it's of course implemented by Chinese state-owned enterprises, the China Three Gorges Corporation, and its financing originally was the Exim Bank of China, the China Development Bank, then the Silk Road Fund came on, and then the IFC came on. And they developed talking about ESG, they developed a environmental impact assessment for this. So again, hydropower has very high risks for biodiversity. It's quite obvious why. And so the first version was conducted by a Chinese consulting company, and it was approved by the Pakistani authorities. But it was not sufficient, really. The second version was done by a Pakistani consulting company, and it was also approved by the Pakistani authorities. And then IFC came on board and looked at both, that they are not fulfilling IFC standards. The project is classified as A, which means high risk project. And so they had to do a third environmental impact assessment. And of course, that delays and delays and delays the project. Very similar, much smaller project. And Justin, this is of course one of the ways to kind of do also public-private partnerships, particularly for the infrastructure that doesn't pay, is annuity project. So the Kenya Road Annuity Project means.
You have 3 minutes.
Yeah, the Kenya Road Annuity Project was awarded in 2015 to Sino-Hydro, which is a Chinese subsidiary of Power China. So 2015, in 2022, it still didn't start. Now, why? It's just a 66 kilometer road. It's $70 million. It's very small. Now, the reason was that the environmental and social impact assessment was absolutely not sufficient. Sino-Hydro received the license, but did not do an environmental impact assessment. And international financial institutions, what they need is for the project developer to show you actually have done your research, you understand what the risks are, and you have a management plan. And it is something that Sino-Hydro did really kind of hesitated to really engage in. So that really led us to some conclusions. We identified 8 major project gaps in E, S, and G. First of all, kind of how are projects initiated? Very different kind of from many international projects. There's a lot more G2G, government to government initiation. The biggest issues were, of course, in the environmental and social impact assessment that we just described, and the environmental and social management systems. How do you actually manage the risk ongoing, proactively or reactively? And the expectation from international investors is, of course, proactively. And then be transparent, have grievance mechanisms in order for the relevant stakeholders on the ground to address any grievances. And then the reporting and disclosure. So there are really, really strong differences that led or that makes it often harder at this point to cooperate, particularly on a higher level, not just kind of on a supplier level, but actually on a project developer and international finance level. So we came up, of course, with 8 relevant recommendations. That were developed together also with the China International Contract Association. So this is part of the kind of ideally Chinese knowledge system by now. It is, however, still, of course, a ongoing capacity building. I also kind of, as a final note, also one of the things that we found why it's so difficult also for China to accelerate some of the green finance. A lot of the large infrastructure projects have been financed together with state-owned enterprises and state-owned financial institutions or policy banks. They were kind of build, own, operate, transfer projects where the whole project is in one hand. So that's the big coal-fired projects, the hydropower projects. Now the green energy projects, for example, solar and wind, have a different project financing structure. There is a lot from the Chinese side, a lot less SOEs involvement, but a lot more private companies involvement. So it is much more kind of on the kind of FT model, which is the finance and transfer model, with more local ownership that we compare to what we see in the more traditional energy projects. So it has to take a rethink of how project structures are actually designed, how the governance is made, and that often takes time. And this is also one of the reasons why we actually have not seen really such an uptick in green energy investments from China over the last years, as we definitely hope we will see in the next years. So with that, I actually close. I will not do my key kind of summary points. I think I highlighted them anyway in the presentation, and I look forward, of course, to the discussion, and look forward also to Muyang's questions and anybody else's questions. Thanks a lot.
Thanks a lot, Christoph. That was great. Muyang, you have the floor.
Thank you, Martin. Thank you, Christoph. I really enjoyed your presentation. For me, it's more like a learning process of how green finance has been implemented on the ground. I actually found like multiple themes actually appearing in your presentation. And one of the themes that has been discussed quite much is actually the form of financing for these green or renewable energy projects. So you talk a lot about project financing, which is slightly different from traditional lending, loans. And also the earlier panel was discussing, for example, the equity investments as a new form of financing for development projects. But there is actually a challenge about practicing project financing for projects in developing countries. That is because for project financing, the project has to generate sufficient amount of cash flow or revenue streams in order to repay the loans. So that actually gives an extra requirement for the type of project that the banks can actually finance. So they must be sort of more profit generating than the type of project that could be possibly financed by traditional debt finance or loans, right? Which will foresee a regular type of interest repayment regardless of how the project goes. So does that mean that in the long run we are going to observe that the banks moving from the less profitable project to more profitable project? And a broader question relating to that is perhaps the more profitable project will also attract commercial investors as opposed to just like public financial agencies or like development institutions like the World Bank. Then like a lot of financiers will be competing for them. And these are relatively the good projects on the market. So does that mean that the financially more challenging project will attract less financiers, especially those in lower income economies? So that's like my first question / comments. And relating to that is the issue of, this is a question that I myself has been wondering for a long while, but you didn't elaborate on that, but I'm just curious how you think about it. It's the competition between Chinese finance and investors from advanced industrial economies. So China is actually pretty late, a latecomer in project finance. And before China, European, American financiers have developed a lot of experience practicing project finance. But China is developing very fast, in renewable energy industry. So do you see in the future that there's going to be more competition, or do you see that there is possibility for cooperation, especially tripartite cooperation between China, a developed country, and a developing country? So that's like the second question that would be interesting understanding more. And thirdly, I think you slightly mentioned that, but you didn't elaborate on that in this presentation. That is the principle, the host country's preferences, or are we going to adopt more like a green standard for the project? So I was just wondering, has the host country's principle changed over time, given that China and many other countries have announced that they're going to, finance greener projects as opposed to traditional resources. So these are like 3 of my questions and also comments for your presentation.
Yeah, thank you so much, Muyang. I think your questions are very good and not so easy to answer. So I think that makes them even better. So very much appreciate that. I think for the first question, kind of whether the projects will attract all the good finance, and then kind of the bad finance, or the bad projects don't get any finance anymore. I think there's of course, a long debate, and I'm sure Bert and Justin and everybody else here in the room has a lot of experiences to share there as well. The move towards PPPs, and I showed in the presentation kind of the breadth of PPPs that we can have, how much the government, and therefore kind of really kind of sovereign debt, can be involved into more divestment from the government. There's a lot of nuance on this whole spectrum. And therefore also, of course, the question how much public finance can go into such a project, or how much private finance should go in. The idea is, of course, that a project that can carry themselves because they're revenue generating should not be necessarily financed by public finance. And then we define more clearly, depending on the situation where we are in, what is a public infrastructure, and what needs to be financed by the public. The Kenya Road project is actually very interesting to that point, because roads are, of course, and this is not a toll road. Toll road, I think, is kind of more simple how to understand it as a private project, but a road annuity project. And that what it means is that in this case, Sino Hydro agreed to pay for the road, to build it and to own it, so to say, for 10 years, and to transfer it back to the government of Kenya, or to the people of Kenya, after these 10 years. And what they get for that is a 10-year annuity. So every year they get a specific amount from the Ministry of Transportation. What the advantage is that the Kenyan government doesn't need to borrow a lot of money in order to build this road. But it is actually built by a more experienced corporation. So this is also, of course, a way to finance infrastructure projects that are not necessarily money making from a kind of private perspective, but are actually a public good. So I think there's a lot of creativity that can be done, also to reduce a little bit the debt burden that we see across the some of the less developed countries. The competition between, to your second question, the competition between Chinese finance and international finance. Now, I wish there were kind of real kind of level competition, and then a lot of the financial corporations could actually collaborate. And I think there is already a very good cooperation between the Chinese and the international financial institutions, both on kind of the purely commercial side, but of course also with the support of developing finance institutions. So we are seeing kind of such collaboration. And what I hear is that there's even a stronger interest from some of the Chinese and international financial institutions to accelerate this cooperation. And this comes a little bit back to this project finance angle. Where do we allocate risk? And a lot of the different financial institutions have actually very different risk management capacities that ideally combined kind of can bring projects off the ground that would otherwise not come off the ground, because for every single financial institutions, the risk would be too high. So this cooperation ideally, or kind of this competition ideally also leads to cooperation. And of course, if a project is much more valuable than another project, then of course more financial institutions see a lower risk in this project and are willing to provide finance compared to a higher risk project. That I think the question of how do we finance high risk projects through blended finance, through guarantees, and through other enhancement mechanisms, I think it's a very important debate, but there's also, I think, a lot of progress has been made on that to also get some of the projects off the ground that don't have enough revenues for real private finance. To your last question, the host country principle. So the idea of the host country principle is really the original, that traditionally for Chinese financial institutions and Chinese developers, what was needed was legal compliance. And that meant if the host country gave a environmental and social impact assessment license as a legal document, it was sufficient. Now, the idea of having an ESIA, either in the legal system, of course, then from a risk management system for the financial institutions, is to understand the risks and to understand how do we manage these risks if they come up. And so just having an ESIA license that can be potentially obtained by kind of murky means is definitely not enough to understand the risk or to have a risk management system. And this is the point of kind of the international finance corporation, that really the IFC that championed it, also for the private sector, and of course also of the ESS and the environment and social safeguards of the World Bank, and of course of all the other development banks, and again of the Equator Principle financial institutions, to reduce the risks on the balance sheet. To give you a very, from the Chinese experience, also a very kind of important example where that went bad and kind of that really, I think, changed a lot of the thinking, was the Kenya Lamu coal-fired power plant. That it's a coal-fired power plant, 1.2 gigawatts, and that was agreed. The ESIA license was given, the construction started, and then the courts, there was a lot of protests. The social movement against this was very strong. There was a court case against this ESIA license because it was not kind of done in a sufficient way. It was kind of very haphazard. And the courts then struck down the ESIA license and had the construction had to stop of the coal-fired power plant. And there of course, is extremely expensive for all of the involved parties. And therefore, whether it's the government of Kenya, whether it's Sinosure, whether it's the financial institutions, somebody has to carry this risk. And in order to reduce this risk, you're not moving with half standards, but you want to have international standards. And the other advantage of international standards is you can cooperate much more easily between the different international financial institutions, or also the private financial institutions. So I hope that answered at least part of the questions that you had.
We have 2 minutes in this part of the session. I'll go to the question by Wei Chen on if you have comments on the question of trilateral cooperation with MENA or non-Western parties. Sorry to you, Christoph.
Oh, wait, what's the question? I didn't see that.
If you have comments on examples of trilateral cooperation with MENA, with actors from the Middle East and North Africa region, or non-Western parties.
Yes, I mean, that depends really kind of where you draw the line, but the kind of, as far as I understand, the cooperation between, for example, Turkish development partners and Chinese partners has also existed across the region, or in some instances. I think there's some cooperation also between some Russian partners. And so for a lot of the large projects, you see a lot of project cooperation on different levels. Now, kind of the question is on, do you have in a project structure, you have, of course, the top level of kind of the equity partners that really take responsibility, and you have the suppliers. So on the supplier side, there's super international trilateral cooperation because suppliers can come really from anywhere. The question is, can we move that up to the kind of project risk sharing? And there is also with the MENA region, as I said, with Turkey, some examples, particularly there where we have strong project development capacities.
So we are almost at time, but we have the luck of having Thomas Melonio, who's the Director of Strategy and Research at AFD, and wanted to say a word precisely on examples of trilateral cooperation with China. So I'll give you the floor. You should be able to speak, Thomas. Maybe even put your camera on, I don't know.
So I think, I'm not sure the microphone is on, but can you hear me?
Yes, we can hear you loud and clear.
Yes.
Okay, now just to share an example in 2 minutes, just to state that we had set up a trilateral cooperation between CDB and AFD. The purpose was to finance a project in Senegal and fully the aim was to set up this partnership rather than financing the project itself, which honestly we could have done on our side single-handedly. But it was very interesting to be able to share procedures between AFD and CDB. The sort of difficulties that we had is that CDB is not per se the equivalent of AFD, since it does not provide concessional finance, while AFD does in most countries, and in particular in Senegal. So we had to deal with the difference in interest rates. AFD in that particular topic is more comparable to Exim Bank, which provides concessional finance, and CDB doesn't. So in terms of pure development, and when you're talking about untied aid, then you have this difficulty currently that CDB is not comparable to the World Bank or AFD or KfW or JICA in the sense that it doesn't bring concessional finance. So we had to have sort of a joint financial offer with different interest rates. And the second point is that CDB, while not being tied, generally comes in with Chinese interest. In that particular case, it wasn't the case. So it was a strong political decision by China and CDB in particular to participate in a project where the procurement procedures were not the French ones, not the Chinese ones, but the Senegalese ones. So it ended up with the Senegalese government making the tenders and selecting the companies operating the depollution project in the Han Bay. I did not invent that, but it happens that the project is in the Han Bay, so it's sort of a funny feature of that co-financing. But I just wanted to share the biggest parameters in that trilateral cooperation, which illustrates some of the points that Christoph in your previous in your presentation you illustrated with the chart.
Thank you.
Merci. Merci beaucoup, Thomas. Thank you, Christoph and Muyang. So we'll close this part of the session and we'll go to Tianshu and Wei now. You'll be able to come back after for this discussion. We'll have a discussion if you want afterwards, and so you can. I see there's a hand raise. Please, if you want, you can put your question in the Q&A box, or we can, if there's time, we'll come back to it afterwards. Tianshu, I'll give the floor and the ability to present.
Thank you. Thank you, Martin. Can you hear me?
Yes, perfectly.
Nice. I will also share my screen. Okay.
Perfect. So
okay.
Yeah.
Hold on.
Great.
So it's a great honor to be here. I'm Tianshu Sun. I'm a research associate at Chinese Academy of International Trade and Economic Cooperation. We are a think tank affiliated to China's Ministry of Commerce, and our main purpose is to serve China's aid policy, China's policymaking in foreign assistance. But we also like to call ourselves a 1.5 track institutions. And this particular research is co-pilot with Dr. Shen Wei from Institute of Development Studies. And so I know that tonight we'll talk about public finance and the big issues and the green standard, and also the goal of mainstreaming the climate and nature considerations into public financing. But the question always goes to the who question. So who will take our ambition further? So we talk about the green BRI, the nature standard. Are we talking about China moving forward as one super united figure, or is it a different picture? So following Christoph's analysis on the MEGA projects, our research take a very microscope level to understand the international and the internal administrative system for China's overseas development projects. But hopefully, as we say these days, it could be small and it could be beautiful. So the topic is examine the fragmentation and coordination vacuum in China's foreign aid in biodiversity. So this research began, this research began with our observation before the 15th Conference of Parties for Biodiversity, which was hosted by China in 2019. 2021 and co-hosted with Canada in 2022. So initially, we aimed to look at what China has been doing in terms of international development, supporting biodiversity, and we conducted interviews with institutes in such projects, and was surprised to find two facts. So one is the breadth of related projects and efforts, and two is that the fact that very few is aware of what other entities has been doing, although they could be working with the same implementation partner in the same issue, or even within a short geographical distance. So this led us to wonder why was the case, and especially given that the decision and policymaking of China's foreign aid was designated to be highly centralized. It has been the direction of China's foreign aid management system reform to unify decision-making and strengthen the centralized management. And this is also characterized by the establishment of the China Aid Agency, this China International Development Cooperation Agency, known as CAITEC, which symbolized the consolidation of aid policymaking and resource obligation. And so we wanted to describe and conceptualize the phenomenon to understand what it meant for China's international development cooperation and its engagement with global environmental governance issues. Okay, and more specifically, we wanted to answer this question. So is it consolidated or fragmented? What is the status quo of China's aid in biodiversity? Who governs China's aid in biodiversity? What are the biodiversity aid projects development and implemented? And what are the roles of internal and external coordination? So the research matches. So I want to highlight that this is a ongoing research, and this so we have done the preliminary desktop research. We have done snowball provinces of China with the government, and to this stage, we have developed a very first project level database compared to the TUFF method developed by A-Data in William Mary, but we do incorporate the interagency partnerships based on the interview. So we did a snowballing research data collection method where when we identify one biodiversity aid projects, we'll identify the implementing agencies and the decision-making agencies, and we'll turn on to their website and look for what else projects they'll be doing, and hence they will be developed a biodiversity, the ecosystem of such implemented. So in total, we have collected 142 data points. The earliest we found was in 2004, so fairly recent, and to now. And each represent 1 aid projects. And to be included in a database, the project had to meet 3 criteria. So it has to be concessional, it has to be government funded, and it has to be explicitly demonstrate contribution to biodiversity targets in its objectives. And it's also worth noticing that there are many multi-year repetitive projects, such as capacity building projects that happen every year, but we count that as 1 data point. And we also collected 19 records on coordination between different stakeholders on biodiversity issues. So, but this is not the end of it. So to now we have the database, but also at the next stage, because the travel is more possible for now, we will conduct case studies on selected projects. So just kind of give you what the database look like. It has 142 projects, as I mentioned, and we have a few variables that answers to the nature of this project. So I did a translation of one of the records. So we have the time, we have partner countries, partner regions, source of funding, which contribute to a large chunk of information we'll be providing for this presentation. We have the implementation agencies, and we have the project title alongside with the website content. So I think the structure of the database could be pretty familiar. The description of data always. 1, the type of fund is all grant. We did not deliberately excluded the concessional loans or other type of loans, but that's the nature of China's biodiversity aid. It's all grant. So that also represents, although we do not have numbers for each project, it means that the number will be fairly small. And the second is regional distribution. And due to the fact that over half of the projects are training projects that enroll participants from multiple developing countries. So 98 of that do not specify a single recipient country, but rather are targeted at a group of countries such as Asian countries, the Mekong River countries, the French-speaking African countries, or developing countries in general. And of the projects that do specify recipient countries, 20 are in Asia and 25 are in Africa. And in terms of project type, 64% of the 142 projects are short-term training projects, while 35 of them are longer-term technical cooperation projects with a more comprehensive collaboration method. And there are 8 material donation projects, mainly for equipment used in wildlife protection and forest patrols, and 6 infrastructure projects, including the construction of a Nepal traditional medicine, research utilizing the genetic resources, and also there are the China-Africa Bamboo Cooperation Center in Ethiopia, etc. And regarding the project themes, so what kind of projects are biodiversity project provided by China? So we did, due to the very limited information, as we all know, we can only guess at the content of the projects based on their names, of their website, information publicly available. We created a word cloud based on the frequency of words in the names of this 142 projects to show which topics are most frequently visited. So words such as forestry, desertification, and conservation are not surprising, but the most frequently appearing word is bamboo, which is a very characteristic thing of China, and is actually really related to the issues we will visit later. So what are the characteristics of the decision of the such database? So one foremost characteristic is the hybridity of decision makers and actors. I will put this longer because there's a lot of information. As mentioned earlier, foreign aid is a central government matter, and the policy development and project initiation are always top-down process. And also CAITEC is responsible, well, before 2018, it was the Ministry of Commerce, and after 2018, it was CAITEC is responsible for policymaking and project initiation, etc., and is also responsible for implementing China's Global Development Initiative. So therefore, the hypothesis that the system is centralized, but as you have seen for now, what we draw from the database that this is a highly plural and also fragmented system. So contrary to our hypothesis, there are 8 ministerial level entities participating in foreign aid project initiation related to biodiversity issue. So although there are many projects initiated by MOFCOM or CAITEC, as shown here, 81 projects after 2000, they only counted for 55% of the project we collected. So in addition to traditional bilateral aid and South-South cooperation funds by CAITEC, there are many departments have their own dedicated foreign aid funds. For instance, the Ministry of Foreign Affairs, they have their Lancang Mekong River Cooperation Special Fund, and also the Ministry of Environment and Ecology have their South-South Cooperation Climate Fund, and also there are funds distributed to international organizations such as INBAR and APFNet in forestry and bamboo issues. And also quite counterintuitive is that there are funds goes from the provincial governments, including the Yunnan province and Hainan province, that directly compensate the biodiversity aid projects that cross borders. And secondly, is the issue of decentralization versus centralization versus decentralization of decision making. So the data shows that the system is not centralized, but rather autonomous. But firstly, with so many diverse institutions involved in project approval, it is difficult to identify a single organization that can make top-down, top-level decisions and make sure the enforcement. And secondly, the hierarchical structure between the department responsible for policy formulation and fund allocation, the department responsible for project implementation, and the beneficiary community involved in biodiversity aid can cause a communication breakdowns. I don't think I have included the data here, but we also have a chart of what are the implementation bodies of China's biodiversity aid, and it's more plural than the chart here. So we identified 124 implementation agencies that are involved in the on-the-ground work of China's biodiversity. So that is another layer of plural. And it's also worth noticing that why the bamboo stands out. So for example, the Bamboo Center, one of the centers under the National Forestry and Grassland Administration, had formed a long-term delegation and execution relationship with the Ministry of Commerce and CAITEC, and has been which has been the main channel of China's foreign aid. So out of the 48 projects approved by Ministry of Commerce, 81 projects as shown here, the institutions under the National Forestry and Grassland Administration, the NFGA, are responsible for 553 of them. So this has a direct impact on the planning and design of projects, as naturally the executing agency will choose the topic most relevant to their business, to the business they're familiar with. And that might explain why forestry and bamboo are the most frequently visited words in the word class above. However, although the NFGA are deeply involved in the main channel foreign aid projects by MOFCOM CAITEC, they're not as involved in foreign aid project from Ministry of Foreign Affairs, the Ministries of Science and Technology, and the Chinese Academy of Science, etc. As the Forestry and Grassland Department do not have their own aid budgets, they need to apply for budget from the aforehead mentioned department, resulting in a lack of coherence in foreign aid projects supported by these funds. And on the other hand, the NFGA departments need to mobilize resources and even compete with other departments. And their project design and implementation are therefore greatly influenced by the policy agendas of other departments outside of the main channel as MOFCOM and CAITEC. And the next question goes to coordination. So there's no literal vacuum in coordination. So because in 2028, the Ministry of Commerce have implemented the cross-ministerial coordination mechanism, but this mechanism has been relatively low-key, and what has been contributing to that is actually the coordination process that implemented by the Ministry of Environment and Ecology and the National Forestry and Grassland Administration. So they have a track record of hosting not numerous but repetitive foreign aid policy coordination conferences based on our database. And finally, the projects established through the main foreign aid projects tend to be more repetitive and short-term, resembling the traditional Chinese foreign aid projects that focus on the donation of goods, of basic trainings, and of infrastructure projects. However, the project established through other channels, such as Foreign Affairs, Ministry of Science and Technology, etc., tend to be more integrated and innovative in terms of executive measures and in terms of the thematic issues. So give you an example, for the MOST and the MOFA, they have the Asian Elephant Transboundary Conservation Projects, they have the ASEAN Coastal Zone Comprehensive Management Project. But if you look at the more traditional bilateral aid projects, although there are a few $100 million level biodiversity projects, for instance, the Joint Research Center in Kenya, in Nepal. But if you look at the specific project details, it is an infrastructure building project, although it's designated to use as a working space for biodiversity. So it's still within the China aid, bilateral aid comfort zone. But what add value to it, for instance, in the China-Africa Joint Research Center in Nairobi, is the Chinese Academy of Science, where the experts from the Wuhan Botanic Garden of Chinese Academy of Science work in the building and carry out joint research with African partners. So I don't actually have further slides here, but so I might want to quit the share screening, but I do have some finishing notes. So one is why the fragmentation and coordination vacuum are the two, I don't think I quit that already, two features. So we use the theoretical framework of fragmentation into the understanding of China's foreign aid system. So the theory is that the centrally crafted policies can become increasingly malleable due to the self-interest and organizational preferences among the various government agencies responsible for the enforcement of central policies. And now we're discussing, and now that the discussing of the Chinese policymaking of Chinese foreign aid is not new, but existing research talk more about the identified high-profile principal actors, such as CAITEC, such as Exim Bank we talk about, such as MOFA, such as Ministry of Finance, but overlooked other peripheral line ministries who are actively bargaining and competing for endorsement, for funding and other resources in delivering aid projects, and nevertheless, also contributing to the diffusion of development knowledge and resources. And this fragmentation and coordination vacuum still holds as a key feature, especially when confronted with cross-cutting issues beyond China's conventional scope of aid work. So biodiversity as a main example. So kind of coming back to the broader question we'll talk about in this session. So biodiversity represents a rather emerging and small field of Chinese foreign aid, but understanding the feature could potentially answer some of the questions that has been broadly wondered regarding Chinese overseas development efforts or even lending. So first, there is the lack of centralized steering and planning agency for development project, which hinders the development of a clear policy objectives. And the second is the data issue, always come to the data issue. So the fragmentation has resulted in a lack of effective data management due to the diversity of actors involved in development cooperation. And this makes it difficult to assess the extent of Chinese contribution, identify which theme has to be prioritized. And this also makes it very likely that China's contribution to development issues are greatly underestimated, not only by the currently used database such as AData to measure China's foreign aid, but also by China itself, which is often reflected in the publication of various white papers. If you look at that, it's only kind of capture a few aid projects related to nature or related to biodiversity. And the third is the centralized decision-making process have resulted in a lack of transparency and open access to project information. So the current data we have is only a starting point of related relevant research. And of course, it highlights that with a complete database, we can generate observations and also celebrate the contributions to the theme of development cooperation. And the next step for us is to kind of conduct case studies of projects and understand how fragmentation in the fields can affect development outcome of projects. So we have seen the launch of recently the Global Development Initiative by China, and many people are trying to understand what GDI means for China's development assistance. And from the outside world, China's foreign assistance will be.
Sorry, I mean, you reach time, so if you can, just close in.
Okay, just closing. So from the outside world, the GDI means China's foreign aid is wearing a very new and higher hat, but internally, it means that China's aid also represents a highly fragmented body of work. And so as the main coordinator of Global Development Initiative, CAITEC needs to be aware of the high degree of fragmentation and to pay attention to collecting data from other sectors parallel to itself, but also wishes to play a greater role. And most importantly, just one paragraph left. If China's foreign aid hopes to better respond to the common global development challenges and the needs of the partner country, it needs to take notes of the development knowledge that has been deposited at the end of the fragmentation, which is at the implementation level, and to understand where China should play its comparative advantage in relation to the SDGs. And it also matters if you want to mainstream the peripheral actors who are most familiar actually with the environmental governance challenges in partner countries into the decision-making and designing process of a bigger public financing projects. And from what we have observed for now, for the fragmented system, there is still a fairly long way ahead. So that's our observation from the database. And please stay tuned about our later findings after the case studies. Thank you, Marty.
Thanks so much, Tianshu. So now I will pass the floor to Coraline Goron, who's a professor at Duke-Kunshan University and specialist of Chinese policy related to nature and biodiversity. Coraline, for 5 minutes.
Can you hear me well? Yes. Okay. So good evening and good morning to our friends in Europe. So yes, my name is Coraline Goron. I'm a French, but I'm at Duke-Kunshan University, located in China, near Shanghai, and I'm a professor of environmental policy. So I will, and thank you so much, Tianshu, for the wonderful presentation. I am learning a lot. So I just want to make one disclaimer, which is before I do my remark, which is that I am not a scholar of development policy. I'm a scholar of environmental policy. So I learn a lot, from your presentation about development projects and also the previous sessions, and it's very interesting. But my remarks will be more targeted at the fragmented nature of the field and within China, and perhaps some of the relationships with global environmental governance that we can make. And I will ask a lot of questions, so hopefully that will launch a nice discussion afterwards. So on the first topic of fragmented, what is called the theory of fragmented authoritarianism that you're using, and pointing out the lack of coordination and competition, I wanted to come back on this and really try to question the kind of assumptions behind, first of all, behind the fact that this fragmentation may be a bad thing. It may be that indeed in a field like biodiversity conservation, there are different types of cooperation that need to take place on the science, on technology, on training, on all kinds of different things. And indeed, these are building on specialized knowledge that is actually better handled in a fragmented way rather than in a very centralized way. So I was wondering, is that a bad thing, or is it something? Is there some features in the fragmentation? And this is something we also have in global environmental governance. There is always this question: would it be better to have one centralized environmental world agency, like the World Trade Organization, like a World Environmental Organization that would centralize everything and would kind of have this big weight? Or is there some value in having fragmentation with specialization around issues, and perhaps with like ways of communication and learning? And I think you pointed out in your presentation towards the need for learning mechanisms. So maybe instead of thinking about centralizing everything, having systems in place to learn and to bring this knowledge back to decision makers, maybe another way to think about that. I also, like yourself, did my little research, and I found, the weight that MOFCOM has had in the past in handling, foreign aid projects. And I can still see that in your database, it's still like the bulk of the projects is still coming from there. So I was wondering, in this fragmentation that you see and these power relations or competing relationships in terms of getting access to funding, do we have, is there a legacy or past dependence in favor of MOFCOM? And then what would that mean? In a sense, like, even though we have this big variety, and I appreciated the word cloud that brought bamboo, but in the sense, it doesn't really tell us about the type of projects that these are, and whether there is a certain way that MOFCOM has to think about in the way it thinks about biodiversity, that would kind of orient the bulk of the projects in a certain direction. And is there a way that actually the current fragmentation with other agencies would diversify or broaden the way that MOFCOM maybe traditionally thinks about biodiversity, or the way that it can integrate development aid projects? So this is maybe a second question. And then so I was very interested by the fact that all of these projects that you identified were grants, because compared with the presentations we had before, where it was always talked a lot about loans and the role of the the development bank and the China Development Bank and the Exim Bank and so and then we also had this presentation about the very big role of the World Bank and ADB in environment. So these are like this seems to be really the big focus of the discussion. But what you are kind of showing with your paper is that there is a much broader variety, and maybe the amounts are not big, but maybe the leverages are very high, especially when we are talking about training and knowledge transfer in this field, at least of biodiversity. It seems to me that it's we don't need we may not need a massive investment in terms of building like a hydropower plant or something like this, but smaller and more targeted budget can have very huge leverages if they allow to put in place system and transfer knowledge for biodiversity protection. And so that point also kind of relate to a discussion that was at the beginning of the session on these global public goods, and when there is development aid, then when there is a global public good, then there is a need for more government interventions. And so the fact that here it is grants and ODS seems to make a lot of sense to me. But I'm wondering, there has been at the COP15, a lot of talk about leveraging and getting more money, more private sector money into biodiversity conservation. And we know this is already a problem in China to actually get private money, private finance, private biodiversity finance into conservation within China. It's a huge challenge at the moment. So it's interesting to see that this is kind of reproduced in the foreign aid field, that we also have a difficulty perhaps to bring in private finance or banks or other types of financing mechanism in the biodiversity field. So I think that was something interesting. Yeah, so I have a question about the content or a remark about the content of the focus of these projects. So you gave us already some small ideas about the fact that the bamboo is very present. There was also some other things. But I was wondering, and you mentioned also that the MEE and the National Grassland and Forestry Administration have been doing some sort of like, at least at the discursive level, kind of coordination to sort of set the priorities. But I was wondering if there were actually, even at the discourse level, an orientation for biodiversity projects from China that you would identify as mainstream or as setting priorities that would be deviated from by all these projects, or if you see a kind of do we have such a discourse? And I'm just going to tell you where I come from to this issue, because in the international arena, there has been a Chinese position to develop a global ecological civilization, a global community of mankind. So these are like the kind of discursive elements that there is a contribution that China wants to make to green development and global biodiversity governance, global environmental governance. But in terms of setting priorities, it is, or fields, it remains a little bit vague. And the one orientation that we see in the discourses of, for example, Minister Huang, has been the green BRI, which I didn't really see as appearing in your graph. So I was wondering, where does that sit, right? Because it seems to me that this is kind of the only almost structural element that is very concrete, project-oriented kind of element that we see in the discourses. The rest is like South-South cooperation, but there is really not a lot of content. And that relates to, and my two questions, so the structural one about fragmentation and then the discursive one about content and priorities come together in my next question, which is about the Kunming Biodiversity Fund. So at the COP, the Chinese president sets this very significant Kunming biodiversity fund. And there was also at the same time a lot of pledges by Chinese private actors to increase their own contributions to biodiversity finance. And then since that time, there were actually in subsequent negotiations, a lot of developing countries almost making calls to China to make this Kunming Biodiversity Fund the new global biodiversity fund that they wanted to establish, without getting any answers from the Chinese government on any of these these calls. And I was wondering, so there were lots of discussions around, is this because it cannot be a multilateral fund, it has to be a Chinese fund? Is it because there's still uncertainty around who is going to host this fund, or how is it going to be managed, by which department? And maybe there are some infightings or maybe some competition between departments about who would be in charge of this fund. And there is also, of course, a lot of discussion still about the priorities. So what is it going to be about? We know that, for example, the Japan Biodiversity Fund had a set of clear priorities in helping, for example, developing countries to establish their biodiversity strategies. The Korean government also established a fund. I'm going to finish. Yeah, this is the end. So we have like this quite narrow bilateral funds that have been established for biodiversity by other countries in the past, have been kind of focused on specific type of issues because this is small amounts and they want to have an impact. But we still don't really know where these where this focus will be from China. So I was wondering if you had something to share about this. And yeah, I think this is all. I also had one small comment about the role of NGOs and civil society, but I think you mentioned 120 implementation agencies. From what I understand, most of them are in the developing countries where these projects are handled, or maybe some local Chinese government or other types of agencies. We have some Chinese grassroots NGOs that are starting to do some biodiversity conservation projects abroad, but this is a very, very small number, and they're very brave, but it's very hard, and they have a hard time getting finance. So I was wondering if you could elaborate, on this and tell us a bit more about what you think about private, like civil society actors becoming actors in foreign aid and foreign biodiversity project from China. Okay, that's all. Thank you.
Merci beaucoup, Coraline. Tianshu, just so you're not going to answer a question. We're quite over, so just 1 minute, just on perspectives, and then we go to Minwen Zhang.
Can I actually invite Dr. Shen Wei to answer a question, because I think Dr. Shen has really good insights to share, and I can complement if time allows.
Sure, very, very short, please.
Thank you very much for inviting me and participating in this wonderful discussion and workshop. Caroline, wonderful questions. I try to answer some. Started with the very good questions about fragmentation, whether it is a good thing or bad thing. To me, I think for a massive system like this to work, you need a certain level of centralization and a certain level of fragmentation. It's never just a black or white issue, right? And how to evaluate whether the fragmentation is really helpful, but particularly I think you mentioned a very important issue is that whether they're facilitating learning among different actors. We tend to believe that at the moment they are too fragmented. There should be a certain level of centralization. One typical example is like it took Tianshu, a government-affiliated think tank researcher, of 6 months to gather all the data itself. Shows that the learning itself is not very effective, right? It's like, otherwise the data should be available, should be open, and should be much easier to collect and to analyze about this picture. And this shouldn't be a 6 months project to just get data. And it is not even complete yet. And also we see that, so the polarity of actors itself is not matter. It doesn't matter if they communicate. But the question is that if you have a polarity of actors, that don't communicate that often, then it really matters. And also, we were also looking at the duration of the projects. If some projects are constantly repeating itself without any innovative measures, without any progress, and if it is implemented by the same type of actors within a small group of decision-making system that are isolated from other departments or ministries, we tend to believe that there are vested interest in this. There are lack of innovative capacities rather than more innovative capacities in these areas. So that drives us to the conclusion that at least at the current level, a fragmentation can be a source of problems. We're not decisive in this at the moment. We need to look at the data from the case studies to further prove our points. But at least that's our kind of preliminary findings at current stage. So in an ideal world, you need to have a steering agencies to coordinate among these agencies and to facilitate the learning, because, for example, what lessons can we learn from the bamboo projects that being applied to, say, the Mekong Lancang cooperative mechanisms and so on. That's something that they're not happening yet. And
wait, sorry, to interrupt. I suggest we go to Minwen. With
okay.
To say, and then I think we will have a bit of time to have a general discussion. So you can may come back for the end, and we'll end at we plan to end at 4. If you want, we end at 4:15. But I'll give the floor to Minwen if that's okay. And I know it's very late for most of you who are based in China, so please go ahead. So we took a microscope to look at future of project, and I think the last part of this conference would kind of take a step back and look at the future of how the BRI is evolving. And Minwen Zhang is the Deputy Director General of the International Economic and Finance Institute think tank in Beijing.
Thank you. Thank you, Martin. Could you hear me? Hi. Dear colleagues and ladies and gentlemen. I'm very pleased to attend this session. And just as Martin said, I'm from the IFI, which stands for International Economic and Finance Institute. We are an affiliate to the Ministry of Finance of China, and we do research on multilateral and bilateral economic and financial issues, as well as multilateral development banks and development financing. So it was a quite informative discussion between Professor Lin and Professor Hofman. And the papers the other two experts presented are also very helpful as well. And according to the conference agenda, I would like to make 3 observations on the BRI, namely the contribution to global economy and green BRI and high standards. So my first observation is that BRI has made positive contributions to global economic and social development. Since the BRI was put forward in 2013, trade volume between China and BRI was put forward, has grown at an average annual rate of 7.5%, and China's direct investment in BRI countries has increased by 5.4% annually. According to the World Bank estimates, BRI infrastructure projects will boost global trade and income by 6.2% and 2.9% respectively, helping to lift 7.6 million people out of extreme poverty. And according to a survey by McKinsey, more than 85% of employees in the Chinese companies in Africa are local people, effectively driving the local population out of poverty. And in particular, the industrial parks jointly built by China and other BRI countries have become an important vehicle to deepen economic and financial and trade cooperation. Professor Justin Lin actually alluded to this in his presentation. So the industrial parks has promoted the clustering of factors and industries according to the comparative advantages of the host countries. And it promotes exports, also helping BRI countries to integrate into global economy and contribute to the resilience of global supply chain, especially since the pandemic. And my second observation is on the green BRI. As Christopher just now has elaborated on BRI, so I will just highlight the following three perspectives regarding green BRI. So first, we need to promote green transformation in the process of achieving development. The path of emission reduction should be built upon the country-specific in terms of resource endowment and development stage. And second, energy transition should also be pushed forward based on energy reliability, accessibility, and affordability. We need to try to avoid the potential risks caused by radical energy transition, which may lead the country into energy crisis and energy poverty, as we have seen evidence, you see, in the past several years. And third, a diversified financing system should be enhanced. It may include, but not limited to, strengthening tripartite cooperation, as in previous sessions, you see, the experts has highlighted, attracting the participation of MDBs and financial institutions of developed countries, and also, you see, leveraging private sector funds. So my third point, my last point, is about high standards of BRI. Taking finance as an example, Belt and Road financing guidelines and debt sustainability analysis framework promotes sound investment and financing decisions in BRI countries. And to achieve high standards, we need to have an organic combination of the following three aspects, which are following the international standards, adapting to the development stage of countries, and third, following the market rules. So specifically, first, the high standards of BRI practiced are actually consistent with the ESG standards that are promoted by the international community and the concept of high quality infrastructure as indicated under the G20 framework. And second, high standards should be adapted to the development stage, capacity, and affordability of the host country. For example, in Singapore, where you see Bert Hofman lives now, actually the high standards in that country is an evolving process. As the country, you see, moved from low-income country to a high-income country. And this message actually was sent out by the Singapore leaders. And third, to follow market rules, cost effectiveness should be considered. The projects need to be, you see, inclusive, affordable, reasonably priced, and widely beneficial. So to conclude, actually, due to time limits, I have not elaborated, you see, many of the observations we have found, but we look forward to further communications and exchanges with all our colleagues you see online today. Thank you very much, Martin. Thank you.
Thank you very much, Minwen. If Christoph or Wei or Tianshu, you want to give a final word on the discussion or on this, feel free. Let me know if you want to say a word. Otherwise, it's 4:03, so we can close. Or if I see questions in the Q&A, Christoph, go ahead.
No, I think, and thank you so much, Minwen, Zhang Minwen. It was very informative and, of course, also helpful kind of to see the perspective that you bring. And I think there's, of course, not a golden for kind of the challenges of green development. There's no Panaika. We don't know kind of a lot of the solutions, and there's a lot of legacy investments that have to be phased out. And so kind of from your, particularly on your 3 points of emission reduction, the country-specific endowments, the energy aspects of accessibility, affordability, and diversified finance, I think are very well taken. And there's, I think, no need for radical energy transition, but I think we need a radical change in kind of decarbonization in order to also protect the people on the ground from the effects of climate change, and to accelerate also, of course, the investment in the green energy. So without decarbonizing our economies as fast as possible, I think the damage from all we know from the IPCC reports and others, I think are for the financial sector much more drastic. So I think it's a measured radicalism from the transformation. We have been promising the transformation for 10 years. It's time to move on. I also want to make one point on this regard. It's very interesting that of course, from an energy dependence point of view, since you mentioned that the energy dependence on imports and for fossil fuels is actually crippling a lot of the countries. Pakistan is right now suffering from a balance of payment issue, also due to the need to import some of the coal. And that is, of course, there's some ideas that few countries have gone to kind of length and struggles to import sun or wind. I think it's kind of more the stability of energy, but definitely I think from an energy independence point of view and from a balance of payment point of view, it seems more reasonable to suggest to reduce imports of fossil fuels and dependence on them.
Thank you. I'm looking at the panel and the Q&A. I think I think this discussion showed how hard, I mean, that it's kind of challenge which is global, but which is also applied to Chinese development finance. It will require both the macro and micro changes in terms of standards, in terms of applying them, and it's starting, but there's a question of how fast we can go, and I think that's really the tension that I want to discuss there. And I think that happy that the discussion brought from very micro project level perspective and the more macro aspects, and I think that will tie well this entire 2 days where the challenge of debt, challenge of sustainability were discussed, and that we want to continue with continue to support research, be a space for product research and the space of discussion, and so with that, I will close the conference, and thanks a lot to you all, especially everybody, but especially those who are in Asia and staying up late, and continue this program. So please follow us, research and newsletter for the new next conferences under this program. Thank you so much.
Thank you, Martin. Congratulations.
Thank you very much.
Thank you. Have a good
Thank you,
afternoon.
Martin.
Thank you.
Evening.
Thank you.
Bye-bye.
Bye.
Yeah.